In the currency quadrant, we're looking at a weekly bounce in the March Canadian dollar. On a weekly basis, the Canadian dollar finished down by 0.5%, but it bounced 0.7% off its lows. Today, the Canadian dollar completed an outside range day to the positive side, which may be a reversal considering the positive close after 3 consecutive sessions lower. On the high today, 75.33.5, that was up a little bit more than 0.5%. On the low, 74.70, down 1/3%, and we finished slightly positive on the day going into the New York session. Now, we did have some Canadian data that was critical in terms of a read on the Canadian economy, and it was employment data, and it was mixed, with the employment change figure only adding 1,000 workers when the last read was for an addition of 24,900 workers, and the expectation was for another 13,500 to be added. The unemployment rate was lower than forecast at 5.8%, but unchanged from last month when the participation rate fell by 0.1%, which may account for the change in the rate, or I should say the lowered rate versus last month. Year-over-year wages rose to plus 5.7% from a previous read of plus 5%. Also, full-time employment dropped by 23,500 workers as part-time employment increased by 23,600. Now you compare that to the U.S. payrolls data, and it was strong on the headline, but there was weakness underneath. Non-farm payrolls rose 216,000 in December, beating the consensus of 150,000 and the whisper number of 175,000, but the previous 2 months were revised lower by 71,000 jobs, bringing the net gain to only 145,000. And private payrolls were only up 109,000, including downward revisions. Also, total private hours worked declined by 0.2% in January. So that caused an early rise in U.S. Treasuries, which was then given up where they turned negative in terms of the yield, and that added a little bit of strength to the Canadian dollar by weakening the U.S. dollar.